India is sitting on one of the world's largest private stocks of gold. For generations, that gold has largely sat inside Indian households in lockers, cupboards, and jewelry boxes. But something is changing. Gold is increasingly becoming a source of credit. By May 2026, India's outstanding gold loans had reached approximately 3.3 lakh crore. The industry grew by nearly 50% in FY26. And gold loan portfolios of NBFCs grew even faster by almost 70% year on year. But here's what makes the story interesting. Some of India's biggest business houses are now entering the gold loan business. Those are Tata, Godrej, and Aditya Birla. So why are some of India's biggest financial groups suddenly interested in lending against your jewelry? And should companies like Muthoot Finance and Manappuram Finance be worried about it? Let's understand. And Yadnya is offering 60% discount on its model portfolios through the coupon code FREEDOM, that is FREEDOM. We have just finished rebalancing our portfolios and it's a very good time to get access to them. Part 1. Why is the gold loan market booming? There are actually two stories behind this growth. The first is obvious. The gold prices have gone up sharply. Imagine you have jewelry worth 5 lakh rupees. If the gold prices rise, that jewelry is now worth 7 lakh rupees. The same gold can potentially support a larger loan, subject to the applicable loan-to-value limits. So lenders can grow their loan books without customers necessarily bringing in significantly more amount of gold. In other words, the value of the collateral has increased. But there's another reason. Indian lenders are looking for alternatives to unsecured loans. Personal loans and consumer credit expanded rapidly over the last few years, but regulators have become more cautious about unsecured lending. Gold loans are different. There's a physical asset sitting with the lender. The process is also simple. Bring in your gold, valuation happens, you pledge your gold, you take the loan, and there is repayment after that. And if the borrower defaults, the lender can eventually auction the pledged jewelry after following the required process. That makes gold loan attractive to both borrowers and lenders. Part 2. Arrival of the big names. For decades, gold lending in India was dominated by specialists, by names like Muthoot Finance and Manappuram Finance. These companies built enormous branch networks and developed expertise in gold valuation, storage, and auctions. But now the game is changing, and the first big signal came from Tata Capital. Tata Capital acquired an 88.6% stake in Yog Loans, a Kerala-based gold loan company. And this acquisition immediately gave Tata access to 160 plus branches, around 32,000 customers, and a gold loan book of more than 700 crores. Why acquire a small gold lender instead of building everything from scratch? Because in financial services, distribution takes years to build. Branches, customers, gold appraisers, process, technology, auction systems, compliance. Tata has effectively bought a running platform. And the message is clear. Tata Capital doesn't want to watch the gold loan boom from the sidelines. It wants a piece of it. And now comes Godrej. Godrej Capital has also entered the space by acquiring the gold loan business of Kanak Durga Finance. The acquisition brought approximately 280 crores of loan assets, 12,000 customers, and 54 branches. But the interesting number isn't 280 crores, it is the target. Godrej Capital wants to build a gold loan portfolio of approximately 5,000 crores by 2031. That is almost 18 times the size of the acquired portfolio. So this isn't simply a diversification exercise. Godrej is effectively saying we want to build a serious gold lending business. And then there is Aditya Birla. Aditya Birla Capital is taking a different route. Instead of relying primarily on an acquisition, it plans to build a dedicated gold loan network of around 1,000 branches. Just think about it. 1,000 branches require employees, gold appraisers, vaults, security, technology, compliance, and an enormous operating investment. A company doesn't make that kind of commitment for a short-term gold price cycle. It suggests something much bigger. India's large financial groups believe gold lending could be a structural retail credit opportunity. Part 3. But why gold? Here's the fascinating part. India already has a massive financial asset sitting in millions of households. Gold. And historically, most of the gold was economically unproductive. You could wear it, store it, you could pass it on to your children, but you couldn't easily use it to generate liquidity. A gold loan changes that. A family doesn't necessarily have to sell its jewelry. It can pledge it temporarily, raise money, and get back the gold after repayment. And that makes gold loans useful for much more than emergencies. A small businessman may need working capital, a trader may need short-term liquidity, a family may need money for education, an affluent investor may need cash without selling long-term investments. So gold lending is gradually moving from I desperately need money to I have an asset, let me unlock its liquidity. And that dramatically expands the potential market. Part 4. The Muthoot Manappuram challenge. For decades, Muthoot and Manappuram had one major advantage: experience. They know how to run gold loan branches, they know how to value jewelry, they understand customer behavior, they know how to manage auctions, and they have built enormous distribution networks. And now imagine competing against Tata's brand, Godrej's Capital, Aditya Birla's distribution. These groups have access to large customer ecosystems and potentially lower cost funding. So the question isn't whether Muthoot and Manappuram will suddenly disappear. They won't. The most interesting question is, will the entry of these corporate giants change the economics of the entire industry? Because when more lenders enter a market, competition increases, and competition can mean lower interest rates, better customer offers, and eventually lower margins. Part 5. The risk behind the gold loan boom. Gold loans may look almost perfectly secured, but they aren't risk-free. The biggest obvious risk is gold prices. Suppose a lender gives a loan against jewelry when the gold prices were high. If the gold prices subsequently fall sharply, the value of the collateral falls. The lender may then need the borrower to bring in additional money, or in case of default, eventually sell the jewelry. There are operational risks also. Gold has to be accurately valued, securely stored, properly documented, and protected from fraud. One major failure in any of these areas can create not just a financial loss, but a huge reputational problem. And then there is perhaps the biggest risk of all. Everyone wants to enter the same market at the same time. Part 6. The big question. Is this a gold boom or a credit boom? This is where investors need to be more careful. The 3.3 lakh crore market looks enormous, but part of the recent growth is because gold itself became much more valuable. So we need to distinguish between more gold being pledged and the same gold supporting larger loans. Those are not the same things. If gold prices continue rising, gold loan portfolios can grow rapidly. If gold prices correct sharply, the industry's growth rate could look very different. And if every major financial institution starts chasing the same borrower, interest rates could come down. So, the future profitability of gold lending will depend on much more than gold prices. It will depend on cost of funds, branch productivity, credit quality, competition, and operational efficiency. For decades, India's gold was largely treated as something to own. Now it is increasingly being treated as something that can also provide liquidity. That explains why Tata, Godrej, and Aditya Birla are entering a business traditionally dominated by specialists like Muthoot and Manappuram. The numbers tell the story. 3.3 lakh crore gold loan market, nearly 50% industry growth, almost 70% growth in NBFC gold loan portfolios, Tata Capital acquiring 88.6% of Yog loans, Godrej targeting 5,000 crore, and Aditya Birla planning around 1,000 branches. So the real story isn't simply gold prices are rising, it is much bigger. India's enormous household gold stock is gradually becoming part of country's formal credit system. And now the battle is just about to begin. Will Tata, Godrej, and Birla expand the overall gold loan market, or will they simply take customer and market share from Muthoot and Manappuram? And if gold prices fall sharply, which of these companies will be best positioned to handle the stress? That's the question investors should be watching. Tell me in the comments, if you had to choose one business for the next 5 years, Who would it be from these 5? Also tell me if you're enjoying this voiceover format. If you do, like and share. Subscribe to be a part of the Yadnya family, and me, Ashwini Ade, will see you in another one. Until then, happy investing.